Okay, good morning everyone. So let's get started with the Indian financial system. So Indian financial system components and function. Indian financial system refers to all the institutions, structures and services that provide pecuniary facilities to the public. It makes possible trade and transfer of funds in secure manner. India being a democracy has independent pillars of financial system, especially in the areas of banking, capital and stock market, insurance, liabilities, claims, transactions and investment. So it is more important for wealth creation and economic development of the country. What are the characteristics, importance and functions of Indian financial system? So issuing and gathering of deposits, supply of loans from the collected pool of money, undertaking of financial transactions, boosting the growth of stock market and other financial markets, setting up the legal commercial substructure, provision of monetary and consultative services, permits portfolio adoption for existing assets, allotment of chance and risk. It forges a connection between depositors and investors, boosts depth and breadth of finance by increasing its horizon. It is responsible for capital creation, adds time value to assets and money, to set up entire payment structure and system, allocate and dissipate the economic resources, to maintain the economic stability in the country and the markets, and to create markets that can judge the investment performance. Now, let's talk about the components of the Indian financial system. So, there are several components of the Indian financial systems, which includes financial institutions, financial markets, financial instruments, financial services, and the currency, which is money. Okay, so financial institutions, their role is like to mediate between the lender and the borrower. So, the lender's savings are gathered through various commercial markets, and financial institutions like have two major types, and these have three categories. So first one is regulatory. So those management and institutions which regulate and overlook the commercial and financial markets. So example are RBI, IRDA, SEBI and etc. So these are counted under regulatory bodies. Now intermediates, so those institutions which provides financial counseling and help by offering loans and etc. So these are like PNB, SBI, HDFC, BOB and all like types of banks. Those comes under intermediates. Now the third one is non-intermediates. So these institutions actually helps corporate visitors with their finances. So examples are like NABARD and SIDBI, etc. Now let's talk about the financial assets. So objective of these is to provide convenient trade of securities in the commercial and financial market based on the requirements of those who seek credit. So these are like goods or products which are sold in the financial markets, and financial assets include like certificate of deposit, bonds, stocks, cash or equivalent cash, derivatives, bank deposits, loan and receivables. So about primary and secondary market, we are going to cover it in the section of primary and secondary market audio log. So for now, just focusing on the Indian financial system only in this podcast or audio log. So now let's talk about the financial services. So the major objective of these is to provide counseling to their visitors regarding the purchase or selling of the property, permitting transactions, deal, lending and investments. So these make sure the effectiveness of the investment and arrangement of funds sourced to. So these are usually taken up by assets and liabilities management companies. Okay. The banking services. So functions performed by banks such as provision of loans, like financial services, like include these services, like also include in them. So these are like banking services. So functions performed by banks such as provision of loans, accepting debits, giving out the credit or debit card, account opening, granting checkbooks, are all these part of these services which are called as banking services. Now insurance services. So these services include like offering insurance, selling policies, brokerage deals and etc. So these are all under insurance services. Investment services. So investment services include overlooking and management of investments, assets and deposits. Foreign exchange services. So these include currency exchange, foreign exchanges and foreign fund transfers. So these all are about the financial services. Now moving ahead with the financial markets. So the markets where trade and exchange of bonds, shares, money, investment and assets takes place between buyers and purchasers are these. So we are going to read all about these financial markets in more detail in primary and secondary market chapter. So for now we are just moving ahead with the other components of the financial system, which is money. So it's an important medium of exchange that can be used to purchase goods and services, and it can also be act as a store of value. So it is uniformly accepted everywhere. It eases transactions, especially impromptu daily purchases. So it makes the goods and services easily exchangeable. It acts as a verifiable record in socio-economic context. Okay, so in this chapter, we would be just discussing important components of financial systems, which is like financial institutions. So we are mainly dealing with the financial institution in this podcast, so in this audio log. So let's start. Okay, so we are going to just discuss about the different financial institutions, which are like RBI, EXIM Bank, NABARD, National Housing Bank, SIDBI, IRDAI, SEBI, IFSCA, NFBID, PFRDA. Okay, so let's start with the very first financial institution, which is RBI. So the RBI, we are going to just read about it more in much detail in the later podcast. We would be just discussing about the RBI in more detail, but for now just understand the following functions of RBI, which we also discuss later in more detail later. So RBI, as we know, is the central banking authority, or it's like the central banking authority of India, and it has several functions, like just it has monetary control function, supervision control over like commercial banks and VFCs, primary dealers, cooperative banks, and it has like it is also management of the government. So it is managed by the government, and management of the government debts and funds. Also, it's like a banker to a government. It's a lender of last resort to the banks, and it's a regulatory money markets through monetary instruments. So it's regulate the money market using the several monetary instruments. So later we will be discussing about the RBI in some other podcast. Let's move on to some other financial institutions. So EXIM Bank. So EXIM Bank, the full form is Export-Import Bank of India. So Export-Import Bank of India is the premier export financial institute of the country that seeks to build value by integrating foreign trade and investment with the economic rise of India. So the bank has been guided by the expertise at board level by senior policymakers, expert bankers, leading players in industry and international trade, as well as professionals in export, import, or financing. So with offices spread across India and its select locations of the world, the bank aspires to boost the business of industries and SMEs. Okay, so let's talk about some historical background of this EXIM Bank, which is Export-Import Bank of India. So it was established by Government of India. The bank commenced operations in 1982 under the Export-Import Bank of India Act 1981 as a purveyor of the export credit mirroring global export credit agencies. So EXIM Bank commenced its business operation in March 1982. So it was set up for the purpose of financing, facilitating and promoting foreign trade in India. So its objective is to create export capability by arranging competitive financing at various stages of the export cycle. Also, it's responsible for developing commercially viable relationships with a target set of externally oriented companies by offering them a comprehensive range of products and services and aimed at enhancing their internationalization efforts. So let's talk about the organizational structure. So how it looks like in the EXIM Bank, the organizational structure. So operations of the bank are governed by a board of directors. The board of directors consists of chairman, a managing director, two deputy managing director, one director, each nominated by the RBI, IDBI Bank, ECGC Limited, and not more than 12 directors nominated by the central government, of whom 5 directors are central government officials and not more than 3 directors are from commercial banks, and up to 4 directors are professionals with experience in export, import, or financing. Its headquarters is at Mumbai, Maharashtra. Alright, so this was the organizational structure. Now let's talk about why we need this EXIM Bank. So what's the need of this EXIM Bank? Why we created this bank and why we started the operations of these banks? So the change in the market world and the creation of World Trade Organization. So there was change happening, and there was establishment of World Trade Organization, and it compels India to give a fillip to its export finance. All along it was felt that the Indian exporter needs only rupee finance, but it only due to the change in the export policy of promoting more value-added export, the role of EXIM Bank was very much felt. So it is time that EXIM Bank provided finance for research and development, as indigenous research plays a crucial role owning to intellectual property rights. Okay, so this was the need of the EXIM Bank. Now let's take a look at the functions of EXIM Bank. So these are the following functions that we are going to discuss now. So the first function is finance for export and import. So EXIM Bank helps by providing finance for export and import of goods as well as services from India. So one of the major export policies adopted by Government of India is the export of value added items. For example, all along we have been exporting heads and skins, earning around like $1 or $2, while exporting heads and skins will now earn $25 to $30 when exports in the form of leather or goods. So similarly, importing of raw materials such as gold will be financed by EXIM Bank, since it will be supported or invoked, which can again a value amount item. Okay, so this was the first function. Now the second function is finance on a deferred basis. So EXIM Bank provide finance on deferred basis for importing capital, equipment and other machinery. So the cost of capital in foreign countries will be more, and the Indian importer cannot afford to pay lump sum payment in foreign exchange. So the EXIM Bank provides guarantee on behalf on the importer and enables the importer to make payment on installment basis to foreign exporter. So, or the bank itself may pay in bulk to the foreign exporter and receive installments payment from the Indian importer. The third function is lease finance. So it provides lease finance for importing capital equipment under cross-border leasing, and lessor may be in foreign country, while the lessee will be in India. So EXIM Bank helps the Indian lessee in obtaining the capital equipment on lease by making the lease payment in terms of foreign exchange. It also helps in import leasing, where both the lessor and lessee will be Indians, but the equipment imported on lease may be from USA or UK. The fourth function is finance to export projects. So export projects in the third world countries are financed. India has taken up the various export projects in third world countries, such as railway project in Tanzania, and similarly projects on some of the oil wells in Kuwait and Iraq taken up by the Oil and Natural Gas Commission are also financed by EXIM Bank. All the necessary equipment and manpower required for such projects will be financed by the EXIM Bank. Now let's talk about the fifth function, which is the line of credit. So EXIM Bank provides line of credit to foreign importers so that exports from India can increase. Under line of credit, EXIM Bank will provide finance to the central bank of the borrowing country, which in turn will provide to the commercial bank, and ultimately the credit will reach the importer. So this kind of credit is safe as there is guarantee of funds at every stage. Now the sixth function is refinance in foreign exchange. So the EXIM Bank obtains bulk loans in foreign currencies in the foreign exchange market and provides refinance to the financial institutions, providing export finance. So different type of exporters may require different foreign currencies, and these are obtained by the EXIM Bank at competitive interest rate and are given commercial banks for lending to exporters. It is due to this the commercial banks are able to provide pre-shipments and post-shipment finance to different exporters. Now the seventh function is contribution to equity fund. So the EXIM Bank also contribute to share debentures of the Indian companies involved in export. Export companies, while raising capital, may issue shares which may be partially funded by or financed by EXIM Bank. So the bank may extend this facility as a temporary finance, and it will not retain the shares permanently. As part of this investment policy or by way of portfolio investment, it may invest in shares and debentures of companies involved in export. Now, eighth function is consultancy services. EXIM Bank also provide like technical, administrative and other assistance to exporters. And export projects are analyzed by EXIM Bank from the point of view like technical, managerial, marketing and financial feasibility. When it finds that the project is viable on the above grounds, it will not hesitate to fund it. Okay, so apart from the above assistance, it also provides like discounting facilities for export bills. Though exporters are provided with market development assistance, so they can undertake advertising and sales promotion activities in foreign countries. So the bank signed a memorandum of understanding (MOU) with European Bank for reconstructions and development. So in coming years, the bank is likely to play a major role in export of automobiles and other non-traditional items. If we talk about the recent development in the sectors of EXIM Bank, so there may be a chance like it may be in news, current affairs, so we have to take the care of like just follow the news which is related to EXIM Bank, which may ask in our exam. So I will be keeping my eyes on those news as well, which is where the mention of EXIM Bank or some export-import policies are there. So a quick FAQ, like, is EXIM Bank regulated by RBI? Yes, it's regulated by RBI. So bank primarily lends for export from India, including supporting overseas buyers and any suppliers for export and development and infrastructure projects, equipments, goods and services from India. So who owns exactly the EXIM Bank? EXIM Bank is fully owned by the government of India. So I've read about the EXIM Bank and understood about it little, and I would be revising it all again just to complete it more. And this was all about that. We talked about the EXIM Bank here, and in the later section I will continue this podcast of the financial institution series, where I'm just going to record the next financial institution, which is NABARD, National Bank for Agriculture and Rural Development. Till then, take care, see you, bye bye.